Turning our attention over to the grain markets now. This week, we're joined by Heartland Farm Partners President Jeff Peterson. The markets were closed for day trade on Monday due to the holiday, but when they opened on Tuesday, it was not pretty. We began the conversation with Jeff by getting his thoughts on the reasons behind the big sell-off to start the week.
You know, it starts some time ago, so if we go back to the middle of April, and the reason we go back to that time, Bryce, is that that's a point in time where the funds kind of peaked out. So the funds, or the trend-following funds, the ones who buy the market, they continue to buy if they think the market's going to go higher. They sell it if the market sells off. And we track those positions every Friday. There's a commitment to trader report, but they kind of maxed out their position back there at about 400,000 contracts, which would be about 2 billion bushels. So ever since then, they've been kind of selling this market off, and putting a little pressure on this market. Now, the market had numerous things that were happening during there that would give us some bounces. But then we roll forward, Bryce, and we go to June 17th. And on June 17th, on that Friday, we ended up having a weather forecast that couldn't get much hotter and drier. And actually the market did bounce and the funds did step in and they bought some bushels. But that was a 3-day weekend. We come back in and we start off with that Monday night trade. And ultimately, lo and behold, which happens over the weekends, the forecast changed and start taking some heat out of the market. So all of a sudden you start seeing the funds start backing out. And when that happened, you started seeing some breakdown on the charts. And then what we ended up having is that big ridge that was setting in there. Over time, the forecast looked like it was going to move it back to the south and west, which introduced in some cooler temperatures. And then we started bringing in some more precip. And when that all happened, in amongst all that, though, we had, a big headwind from the talk about a recession. And in addition to that, we had crude oil drop about $10 a barrel. So that all came together to put a lot of pressure on this market, Bryce.
Does the move fully justify, in your opinion, though? I mean, all the outside pressure you're talking about that moves the funds, is it justifiable how far we saw things go down on Tuesday?
Yeah, I don't think it'd necessarily be justifiable, no, but unfortunately it's not out of character for a market where we have this much volatility. Part of the other side of the equation may have been the market might have got itself a little bit too high to begin with, and then ultimately the market did what the market does sometimes and overcorrected and came back. Now, had we have not had the recession talk out there, especially with the uncertainty that's still out there about how many bushels are coming out of Ukraine, we wouldn't have seen as big of adjustment as what we did, Bryce.
But you warned us, Jeff, on this program. We've talked it's not a matter of if, it's when things would turn the other way, and that's what the markets seem to do. That's been the past. You set it up well. Talk about where we're at right now with our current situation for these corn and soybean markets.
Yeah, so right now we sit back and let's just look at the 30,000-foot view. First of all, what we have to realize is that we do have more stocks around than we did a year ago on paper. But as we dig into that number deeper, and this is a challenge, if some of the traders don't look past this, we know because of the problems that are going on with Ukraine, with the war with Russia, and ultimately not being able to ship their stocks and ship their corn and their wheat out of the Black Sea, that's not giving the world as much corn as what you'd like to see coming out of Ukraine. So as a result of that, what you've had happen is the fact that as we see those stocks and that tightness, we look to the side and say, well, what about the other supply out there? And that's where the weather comes into play. Weather's still of a concern here yet. We don't quite have the heat in the forecast that we had before, but there's some dryness. We get past these rains, there's still some dryness. And when we look at the weekly crop progress report, there's a number in there that we watch very close. And that's actually the topsoil short to very short percentage. In this last week's report that came out on Tuesday, we physically dug into that number and we said, okay, what percent of the corn and soybean acres in the U.S. are in a short to very short situation or condition or rating? And 47%. And to put that in perspective, when we look back to 2004, the only time for this past week that it would have been a higher short to very short percentage would have actually been back in 2012. Now, I'm not saying we're as dry as 2012, but there's still some dryness. So there's still, this crop isn't made yet, but we've done a lot of damage to the charts, Bryce.
What will it take at this point to stabilize things and even make the market go higher?
Well, really, I think there's two things. First of all, we really need to get that crude oil market to turn around and give us some support. And basically saying get some help from the outside markets. And in addition to that, we need to see some dryness and some heat. If we'd see some dryness and heat in the market, people would get concerned about what the yields are going to be. Because keep in mind, this whole crop hasn't pollinated yet. It's actually just getting started. That would give us a bounce back in the markets. Depending on how hot and dry it is would depend on how far the market would bounce. but that's what it would take, Bryce.
Tell me more about the relationship there, crude oil to commodities. Why is that so important?
Yeah, years ago, if we'd go back in time, if we were sitting here, say, talking 25 years ago, Bryce, we'd say in simplest terms, how do we determine the value of what basically corn and soybeans is worth? And we'd really say, what's it worth for feed and what's it worth for food? But the minute we ended up having renewable energy come into play, what we did is we introduced an energy component. And ever since then, since we introduced that energy component, that is why there's a connection between corn and crude, but also between soybeans and crude because of the biodiesel or methyl ester production that comes out of the soybeans.
Appreciate the explanation. Let's give you the final word this week, Jeff. What kind of marketing advice do you want to offer to our producers watching today?
I think the best thing that we can do at this time, forget about where the prices have been, because that's going to keep us from physically pulling the trigger to sell. Get ready to make a sale. We're going to need to make a sale on a bounce. We're going to have to sell at levels below where we'd have been before, but that's okay. These are still good prices.